really big question on clients' minds, especially first home buyers, is how much can I borrow? The first point I want to make is this. Different lenders will be prepared to lend you different amounts of money, and these figures are likely to differ totally from what you think you can afford. That's because everyone has a different way of calculating this figure. So whilst it's important to know that you can get a loan from a good lender, the most important question is not how much can you borrow, but how much should you borrow? In working out what you can afford, it's vital to not just think about what's affordable now, but what will be affordable in the future. Can you still afford the loan if interest rates go up? What are your plans around work, travel, or family? And how will these affect your ability to meet the loan repayments when these things happen? To work out how much you can afford to borrow, there are two basic ways to approach it. The first one is to deduct from your net income ongoing expenses, such as car loan repayments, and also general living costs, food, utilities, insurance, clothes, these sorts of things. The amount left is what you have available to direct to loan repayments. The second method works really well if you're renting and looking to buy a home, and it's also very simple. Add together your current rental payments and your monthly savings. This gives you a sound estimate of the amount you have available to cover loan repayments. So let's look at a quick example. Sarah has a net income after tax of $5,500 per month. She has an existing car loan, she rents, she has basic living costs and also wants to allow a buffer, and she estimates that after all of this she saves around $1,200 a month. Under Method 1, Sarah has $2,670 per month to service a new loan, while under Method 2 she has $2,850 per month. So what does this mean in terms of the size of loan that Sarah can afford? Well, while current home loan rates are around 5.25%, we want the loan to be affordable even if rates go up. So Sarah wants to know that she can meet the loan commitments if rates go up by 2%. We calculate for her that a $390,000 loan over 30 years at 7.25% would result in loan repayments of $2,660 per month, which is within her budget under both methods. So how can a good broker help you? A good broker can help you to work out what amount you have to direct towards loan repayments. Then work backwards from there to arrive at a loan amount and a purchase price that fits within your budget. And finally, they can show you which lenders are prepared to lend you the desired amount, and that could be one lender or it could be a dozen lenders depending on their policies and your situation. If you would like help working out how much you can afford to borrow, why not give the team at Hatch a call? Our service is both obligation and cost-free.